Okay, welcome to the Chapter 18, Section 1 and Section 2 presentation lecture. Chapter 18 begins with the end of the fiscal period activities, beginning with the adjustments and the 10-column worksheet. What you'll notice is that this worksheet is going to be larger and is going to contain more data in regards to our financial records than what you experienced when we did sole proprietorship accounting way back in the first chapter, first time through the accounting cycle. So let's take a look at some of the adjustments and how this 10-column worksheet is going to be constructed for a merchandising corporation. All right, section 1 is identifying accounts to be adjusted and adjusting merchandise inventory. Over the course of a fiscal period, our assets are going to be used and replenished. So at the end of the fiscal period, the balances of our asset accounts are going to be more or less than they were at the beginning of the fiscal period. Therefore, that's what warrants the adjustments. So let's take a look at how we're going to adjust some of these assets. Let's first review what we're going to be, let's first review the sections of the 10-column worksheet. It has 5 sections, the first column being the trial balance. The second column is where we are going to record our adjustments. Then, in the third column, we are going to record the adjusted trial balance, which is going to be the accounts taking into consideration the accounts that need to be adjusted. And then column 4 is the fourth section is the income statement, followed by finally the balance sheet. Page 498 in your textbook is an illustration of the 10-column worksheet. All right, so completing the trial balance section. Remember, when we prepare the trial balance, we are looking back into our ledger. We are going to enter the number and name of each account from the general ledger, including their account balance, and then we are going to make sure and put it in the proper column, whether it's a debit or a credit side balance, and then total up the trial balance and rule those 2 columns. If the trial balance, debit, and credit columns equal, then we are set to move on to the next step. If they are not, we have to go back and find the error before we can move on. All right, so here is the trial balance section of the worksheet. Notice how we have all of our accounts listed and their account numbers. These accounts are going to be listed in different categories, I guess, so to speak. All of the 100s, remember, all of the 100s are going to be assets. All of the 200s are our liabilities. 300s are owner's equity. 5 or 600s are, well, actually 500s are going to be merchandise inventory or cost of goods sold. 600s is going to be our expenses, and then I missed the 400s because the 400s will be our revenues. All right, so the adjustment section, we need to know which of our assets accounts need to be adjusted. So we need to adjust the accounts for daily business operations. So for example, let's say that we use computer paper when you print. You don't subtract the value of the paper from the supplies each time that you print. What we do instead is we record an adjustment. This is the amount that is added to or subtracted from the account balance to bring the balance up to date. Now this is going to affect at least one permanent account and one temporary account in order to complete the adjustment. Let's first take a look at merchandise inventory. Now when it comes to merchandise inventory, we are looking at the balance of the inventory account at 2 periods of time. So we're going to take a look at the beginning inventory, which is the merchandise on hand at the beginning of the accounting period. The ending inventory then is what we have on hand at the conclusion of the accounting period. More often than not, these numbers are not going to match, meaning we have to adjust the inventory account. So if we adjust the inventory account, what we need to realize is how is this account changed over the course of the accounting period. We have to look at the merchandise inventory account balance at the beginning, and then the physical inventory that has been counted at the end of the fiscal period. We will subtract the amounts. If we have a greater inventory at the beginning of the month than we do at the end, we may add them if we have an opposite action. So let's take a look at how we are going to adjust this. So we adjust merchandise inventory. Here's what we're looking at. We have a merchandise inventory account that's going to reflect the physical inventory amount of $81,385. The following transaction is going to be recorded because not only do we have to analyze and record this adjustment in a 10-column worksheet, there's also going to have to be an adjustment. This is where income summary comes back into the picture because income summary is our temporary holding account when we make our adjustments as well as where we are going to put money as we determine our ending capital balance, which we will talk about later. So for this one, we are going to adjust merchandise inventory because we have $3,536 less of inventory at the end of the fiscal period than we did at the beginning. Therefore, we adjust the inventory account by debiting income summary for $35.36 and crediting merchandise inventory for $35.36. So let's take a look at the demo problem. We'll be working on this in class, and in this instance, what we are going to do is we are going to be analyzing a merchandise inventory adjustment and then properly recording it into T accounts. So at the beginning of the current fiscal period, Vicky's Car Shop had a balance of $29,861.95 in merchandise inventory. It is now the end of the period, and the staff has taken physical inventory count. So now the balance is $32,415.89. Using the T accounts, go ahead and record this adjustment. So go ahead and try this. Otherwise, we will be doing it next time we meet in class together. Now, another demo is part B, in which case you have another scenario where merchandise inventory numbers are counted and recorded at the beginning of the period and also at the end of the period. So taking that information, we need to do a calculation and then record the adjustment. So give that one a try also, and we will also be taking a look at this one next time we meet in class. Now, after we have recorded the adjustment, then we have to show that on the worksheet itself. So if we have an adjustment of, say, $3,536, as indicated in one of our previous slides, we have to show that merchandise inventory is going to decrease in value by that amount. So merchandise inventory is an asset with a debit side balance. Therefore, we credit the adjustment to show a decrease in the value of that account. And in order to make that account transaction balance or equal, we have to debit another account. And in this case, we are going to debit income summary. All right. 18.2, demo problem 18.2 is working through the adjustment section of the worksheet and adjusting some of our asset accounts that needed to be adjusted. So we will be taking a look and demonstrating this problem in class next time we meet. If you wish to give it a try, feel free to go ahead and do so. Section 2 is adjusting other assets such as supplies, prepaid insurance, and federal corporate income tax. Okay, so let's take a look at how that process looks. If we are going to adjust the supplies account, we have to realize that the supplies that we have at the beginning of the accounting period is not going to match the amount of supplies that we have at the end. So we take a physical count, we determine what we have, and then we have to adjust the account accordingly. In order to adjust the account, we have to show whether or not the supplies account increases or decreases in balance over the course of this fiscal period. Now, usually the supplies account is going to decrease in value. If it does, we show that by crediting the supplies account for the amount of the adjustment, in this case $37.10, and we then debit supplies expense $37.10. So we will not be using income summary in this case for this adjustment. Debit supplies expense, credit supplies. Now when we show this then on the 10-column worksheet, we go to the adjustments column. And in this case, we have a supplies adjustment of $3,710. We will show that by crediting the account here in the adjustments column of the worksheet, and then also show it by a debit to supplies expense, which is lower on this worksheet. You can see how that's going to affect our adjustments column. So if we credit the supplies account, we debit supplies expense in the adjustments column of the 10-column worksheet. Demo problem 18.3 is going to walk us through that, and we will be working through that one of the next times that we meet in class. But if you want to go ahead and give it a try, go ahead. Otherwise, we will be going through it together next time we meet. Now, prepaid insurance. Prepaid insurance is similar to the supplies account. Our insurance value is going to be different at the beginning of the fiscal period and the end. In this case, the value of our insurance policy has decreased by $125 over the course of the fiscal period. Therefore, as like with the supplies account, we would debit an expense, in this case an insurance expense for $125, credit prepaid insurance, $125. That's going to decrease the prepaid insurance asset account, and that's the corresponding debit to show that decrease. This is the T account format. What would it look like if we put it into the adjustments column of our 10-column worksheet? Well, we would go into the worksheet. We would then adjust it, a credit of $125 to prepaid insurance and a debit to insurance expense of $125, which is down lower. Couldn't quite fit on the slide, so it's on a lower portion of this 10-column worksheet in the adjustments column. So demo problem 18.4 is another problem that we will be going through, which is going to be an extension on adjusting these different asset accounts. So go ahead and take a look at that. Give that a try if you wish. Otherwise, when we meet in class, we'll be going over it together. And the final account that we would need to adjust in section 2 here is going to be the federal corporate income tax expense account. Corporations are also required to pay tax. So corporations must pay federal corporate income taxes on its net income. This is recorded at the end of the fiscal period. It is estimated at the beginning of the year, and then it is paid in quarterly installments. So we are guessing at the beginning of the accounting period what we're going to have to pay in federal income tax. Then, once we find out exactly what we have to pay, we have to adjust accordingly. So how are we going to do this? What is this transaction and this adjustment going to look like? All right, so let's take a look at this. At the beginning of the year, On Your Marks accountant estimated the federal income tax at $98.40. The business made quarterly payments of $24.60. So then at the end of the year, what we have found out that On Your Marks accountant determined that the federal corporate income tax for the year was $9,995. Now On Your Mark has already paid $98.40. Those two numbers don't match. Therefore, we have to make an adjustment. So the business owes an additional $155 for income taxes. So to make that adjustment, we look at the T accounts, federal corporate income tax expense, debit for the adjustment of $155, and then we credit because federal corporate income tax payable is a liability. Therefore, we credit the liability, we debit the expense. This is going to account for the adjustment to our federal corporate income tax over the course of the fiscal period. Demo problem 18.5 will give you practice doing that, so please make sure that you go through and try that problem if need be. Otherwise, we will take a look at it when we get to class next time, and we will work through one of those problems together and properly recording the adjustment for federal corporate income tax. After we have completed the adjustment section, we would then rule the columns as we did the trial balance. If everything is done correctly, these two columns will equal. Single rule indicating a calculation is to follow, then the calculation, then a double rule indicating that that column or columns are complete. We can then move on to the next phase of the 10-column worksheet. And that concludes the section 18.1 and section 18.2 presentation lecture. Please make sure that you go back and revisit the slides if need be in order to get the notes so that you have those as study tools before your next quiz. Attempt those demo problems if you wish, otherwise we'll be working on them next time that we meet. And I will see you here for the next presentation lecture, and I'll see you next time we meet in class.